I'm right now joined by Siddharth Purohit. He's Senior Equity Research Analyst at Angel Broking. Thank you so much for joining us, Mr. Purohit. How important has this been for ICICI Bank? Have you got any internal numbers that you have calculated that how much will it help ICICI Bank get rid of in terms of NPAs or stressed assets?
Yeah, morning. If you see the entire development, the sale proceeds of the SR oil, the management has said, as per their yesterday's interview, that a large part of the debt on the holding company level will be repaid, and also some part will go to the operating companies. Now, within operating companies, there are various companies, as you know, within the SR group. Now, ICICI Bank include, and again, even other banks have an exposure to, the entire SR group in a big way, and also have exposure on the holding company level. Now, the quantum of loan that will be repaid is certainly not known to the market, and there is a lot of media news coming up at various levels. But what I can say is that within the watch list, what ICICI Bank had given, some part of that loans of the promoter related entities also had been been part of that, as the management of ICICI Bank yesterday said. So if that part goes out of the watch list, then certainly the amount of stress what market was looking at comes down, and obviously the kind of provisions the market was building in, there is a possibility that that will come down. So there is a big development from lower credit cost expected going ahead for ICICI Bank, and that is what market is cheering about. Now, as far as the absolute amount of repayment and upgradation is concerned, that is very early to say, because after the repayment to the group level, how much will be left over to get upgrade for the steel unit, that needs to be seen, and we need more clarity on that front. But more or less I can say is that ICICI, SBI and Axis being a significant kind of having exposure to the group would definitely tend to benefit, and that is what market is cheering all about. And one part I would just tell you that while market is also talking a lot about ICICI Bank, I believe that even other banks like SBI and Axis also should benefit from this deal.
Okay, Mr. Purohit, there has been to a certain extent, banks have been successful in getting managements to deleverage, private sector managements to deleverage, sell their assets. If one looks at JP, you look at GVK, you look at GMR, SR is the latest in point case. Have you analyzed in terms of the loan book that banks have, which are the big corporates, which are the biggest corporates that have the maximum amount of stressed loans, and what kind of assets they have, and what process is going on right now to deleverage?
See, if you talk about the entire large corporates, in the Indian economic space, then a lot of large and stressed accounts had been classified under the AQR review by RBI in the last 2 quarters, in Q3 and Q4. Now, what RBI had told that time, that even those were classified under as NPA in AQR, if there is a cash flow improvement, then that can get upgraded. Now, what we are observing across a lot of big corporates, that as you said, promoters are trying for resolution, and even as yesterday the management of ICICI said that large part of recognition of NPA has happened. Now the time is for resolution. So now we are seeing that some amount of resolution happening for large corporates, and now even I had been very negative on PSU banks because huge amount of slippages coming in, and then there was expectation of further rise in NPA. But now the trend is kind of changing, that promoter groups have kind of taken a view that it's really time that they should deleverage their balance sheet and start repaying to banks. So it is definitely good news, but time is very early to say how much upgradation and recovery will happen for each of the bank. But in any consortium you see, ICICI, SBI and Axis has been one of the prime lenders in big projects, so they tend to benefit. Now, one thing I would like to highlight, that if talk about the earnings for this quarter and what happened last quarter. When I look at the earnings for last quarter, the slippages amount for the private banks like Axis was largely restricted to the watch list. So if they are able to contain the watch list and the slippages largely comes from that, then it's not a point of worry. But point of worry would be that if they are adding more to the watch list. If you just observe, out of the total slippages of 3600 crore for Axis Bank in last quarter, I mean almost 75% came from the known accounts, the watch list accounts. Right. So, and the core growth which is coming from the retail side, we are not observing much slippages from that. Right. So, my point of view is that once these accounts get resolved, then there is a possibility of upgradation and recovery happening within a couple of quarters, and then possibly banks will be in a position to grow their balance sheet faster. So the trouble phase seems to be getting over gradually. We might pick out in terms of NPA quality very NPA issues very soon. That is what my take is. And Axis Bank, I believe, is well placed as far as resolution is concerned. Also the stock is quite attractively valued, and now also having decent capital adequacy. I believe with 20% kind of growth, one can look at this kind of stocks. For ICICI, no doubt there has been a lot of optimism, but the point of worry is the return ratios. Their ROE levels are pretty low as of now, and as long as that doesn't improve, I mean, possibly market will cheer it on a short-term basis, but possibly it will take time to fill up the gap between valuations of Axis Bank and ICICI Bank. ICICI Bank could trade at a kind of discount to Axis Bank. That's what my view is.
Okay, in one of the interviews, Chanda Kochhar mentioned that almost 50% of their exposure to the SR group will either get repaid or move to a non-SR group exposure. Now that in effect is not necessarily an end of an NPA or a stressed asset, right? Because just because it's moved from one group to another, it still is an asset that's lying somewhere which has not been repaid.
See, if the the loan gets transferred to some other non-SR group entities, as long as the operating performance doesn't improve, okay, then there is always a kind of risk. So the amount remains there. Now what actually market is cheering about is whatever amount has been left other than which is still under the watch list. If the promoter gets a decent amount, then the promoter related entity also, which has been part of the watch list, gets reduced by equal amount. So the bank will not have to take extra provision from that part. And together with this, already the ICICI Bank had already decent amount of floating provisions, and again they will be able to kind of take extra provisions out of the gain from ICICI Prudential. So net what the fact that changes is that they already have extra amount of provisions on balance sheet, and they will not have to do extra provisions because of the standardization of account by certain SR group entities. So these all factors can lead to lower provisions requirement than what earlier we were expecting, and this has led to a kind of optimism. But it's too early to say how much reversal will happen. That is the point.
All right, Mr. Purohit, since you're here, I just want to ask you a little bit about PNB Housing Finance. 2,500 odd crores that they're planning to raise. There'll be a dilution that the holding by PNB goes down. How excited are you about this IPO?
I think it's, I'll not be able to speak on this, and possibly once the issue starts and looking at the valuation and comparative valuations with other banks and maybe NBFCs, we'll be in a better position to give view on that. We have been positive on the housing finance company, as we had covered, even in your channels I had said, Dewan Housing and all. Housing finance companies have been doing pretty well in India. Right. Partly because of, that, retail growth has been decent, and the credit cost and the asset quality of housing finance companies has been stable. If you just observe across all the housing finance companies, it has been for LIC Housing, it has been 0.5, or maybe Dewan Housing just 1% of gross NPA levels. So all companies have been doing well, but for PNB Housing particularly, I really need to check the valuations, and then once the issue starts, I'll be able to give a proper view on that.
Right. Right, fair point. Thank you so much for joining us, Mr. Purohit. Pleasure talking to you. Before I let you go, I just need to take the disclosures because we just discuss individual stocks.
We don't have any. I don't have personally any holding on this company, but we might have recommended this to our investors.
All right. Thank you so much for joining us. Pleasure talking to you. We have to take a very short break right now. The Nifty is trading right now around that first resistance that we've been talking about of the day. 85.88 is the first resistance, and it's trading around 85.86. Time for a quick break, and after that, we'll be showing you exclusive parts of Shekhar Gupta's interview of Mukesh Ambani and Off the Cuff all day today.